Welcome to your Mortgage Insider Update for Cinco de Mayo. We'll start the week off a little bit higher as interest rates have come off their lows. Last Friday's jobs report came in actually better than expected. Unemployment rate stayed the same. A lot of folks had hoped for an increase in the unemployment rate, but not as many people looking for jobs, not as many jobs available, but the two different surveys, the Bureau of Labor Statistics does a household survey, which gets the unemployment rate, which came in at 4.2%, and then the employment numbers came in better than expected after a reduced number of last month's. So each month we get our jobs report as far as the number of jobs that people that started becoming reemployed or got jobs, and then they look backwards because it's an estimate, and they actually brought the number from the prior month down. So net, we actually were about as expected when you figure in the job reductions. But this happens every single month. All in all, a pretty good report. And from that, we're not seeing the likelihood of any Fed moves anytime soon. It's going to be more a wait and see. A lot of the projections were that the Fed could start to cut rates not as early as this meeting in May, but maybe as early as June. Now that's being pushed off, and the expectations more like July, depending on the data, right? So every month we'll get a new update on unemployment and consumer price index, which will be the next inflation report that comes up. The PCE inflation report was also pretty tame for last month, came out. So it's closing the month out, and then we start this month here in May. So let's take a look at the charts. We start this morning with the 10-year Treasury up 3 basis points at 4.33, almost 4.34%. Take a look. And we find ourselves coming off of the 200-day average. When we did this video last week, we were broaching just below the 200-day average on Monday. Held below for a couple days in anticipation of that jobs report, and as the week progressed, we actually had a bounce back Thursday in anticipation, and the actual jobs report Friday pushed us back above the 25-day and the 100-day average. This morning we're sitting just at this Fibonacci retracement line. We've bumped into this before, so we've been higher just in the recent weeks, but we definitely want to remain lower. We've seen the typical V-shaped interest rate market, so it's not been flat. It's been very rocky, so to speak, as the tariff war has continued to drag on. The actual tariffs themselves coming in from China, there's been reports of entire ships turning around on the way back because they don't want to bring their goods in for the tariffs, which would be collected as of this last week. We'll also take a look at the mortgage-backed security, the price the investor pays for the purchase of a mortgage-backed security. So this is going to work in the inverse of the actual interest rate that maybe the consumer sees on a mortgage. And you can see that dichotomy here. You got the 10-year up and the mortgage-backed securities down, just to kind of give some reference. We can see that that's come down over the last number of days, just similar to the 10-year interest rate going up. It definitely represents higher mortgage rates. On average, they've still been coming in just under 7%, about 6.8% on a week-over-week basis. We did see, in the 6.7, 6.6% range for a few days, but the timing is really everything, dependent on when a consumer actually goes into contract on a home. You can see it's been a rocky road. There's been improvement times, but there's been not so pretty times here just in this last month of April. So we'll keep an eye on it this week as the Federal Reserve prepares to meet next week. The major news will mainly just be the press conference and the statements from the Federal Reserve. We're not expecting much of a move, but maybe indications on their willingness or in the future their likelihood of what's going to push them to actually cut interest rates at all, if at all. That's still projected in the marketplace, but not guaranteed, just depending on what happens in the economy. Have yourself a great week. Come at you.